Hi, this is Dan from TrueTrader.net with a weekly recap for March 23rd to March 27th. If there is one way to describe this week, it would be we had some consistent trades, pretty nice trades, slow and steady, but we left a lot of money on the table. But, nobody ever went broke taking a profit. In my opinion, you would rather be slow, consistent, and steady gains than go for the crazy home runs and give yourself stress. So let's get right into the trades. And really quick, I just want to start this off by saying that at the end of the video, Geronimo, our moderator, some of you might know him as Titus Trader on Twitter, he posted some really motivational stuff after the close on Friday that some of you may have missed in the room, and I just think that it hits home so hard to some of the members. I mean, it's just so motivational. I mean, in real time, if you were there in real time, seeing him take these trades and telling his story, I mean, it's something to look forward to every single day. I mean, what we do is very special here. So, Adriano's story is posted at the very end of the video. I think some of you will find it as inspirational, motivational. Hopefully, it makes you take action and actually take control of your trading and your life. So, without further ado, here we go. Again, that clip is posted at the very end of the video. So here we go. March 23rd, one trade for that day. That was McDonald's, MCD. If I recall, we had a nice spike out the gates. Yep. MCD on March 23rd, we got short at 152.73. Right over here in the 152.70s. And again, all of these trades are called ahead of time before the market even gets there. So on McDonald's, I'm pretty sure I called this when it was in the 147s that I wanted to short in the high 152. So we got short 152.7 and we covered in the 149s on the washout a few minutes later. That's a 3-point gain. Can't complain about that. Yes, in hindsight, would have been a home run straight if we held that, right? Completely amazing fade. But again, this market environment is very volatile, and the way to stay safe and the way to just be low stress is to take the easy, predictable, quick money trades that just are no-brainers. I mean, it came up 10 points in just under 10 minutes. I mean, a 2-point pullback into a key level is very, very likely of happening. So that's why we took the trade where we did. Our short at 152.7s for a quick 3-point pullback. That's a no-brainer. 1.5% gain in just about 2 minutes over there. Next was on March 24th. That was on PENN. Yep, PENN. We got long PENN when it came off the highs from 1430s, 1440s into 12.3. I called this long when it was in the 13s. I told the room that I'm bidding 12.3, a few cents below our low. I wanted to see it snap out. Everyone stops. Whoever got long on this, crazy run, especially considering that the prior day was in the 7s, 8s, and 9s. Whoever got long in the 14s, that's pretty crazy. And this move was mainly brokers covering shorts. I mean, they have to force cover them. So that's pretty crazy buying. We did not get short. We were looking to short at 14.8. That came 50 cents away and it pulled back. So no cheese over there. But on the long side, on the buy side, when it came back down and snapped our low of 12.3s, I got long right a few cents below it at 12.3. Because, I mean, this is a pretty quick drop, a 2-point drop, over a 2-point drop in less than 5 minutes. And on the $14 stock, a 2-point drop, that's quite a bit. So we got long at 12.3. I wasn't risking more than 30 cents. If it snapped below 12, I would have cut it off for a 30-cent loss. But, of course, it held. So got long at 12.3, sold in the 1280s and 1290s. A minute later, I held a piece to see if we can retest the highs in the 14s. And I was holding it. But what happened was, over here, when it broke above 13 and then it came back below and then it started to snap below 1270s. At this point in time, my thought process was, okay, this thing might be failing to push higher. It's already came off the lows so much from the prior days, and now we're up almost 3 points, 4 points on a gap. And if this thing snaps below 1250s, 1220s, it may just wash out into mid 11s. So I was staying safe. Yes, in hindsight, it went a lot higher and I probably should have held it, but in real time, I was looking at the market from the perspective of, do I want to go from green to red, right? Or do I want to stay safe in this volatile environment and just lock in the easy money and look for a better entry if it goes lower? So my thought process again was, okay, I'll take off the rest for a 40-cent gain, but if it snaps out and washes to low 11s, I'll get long once again, 1 point lower for a 75-cent to 1 point bounce. that made more sense to me to get long at low 11s and sell against low 12s right against our low if that snap came. That made a lot more sense to me if momentum had failed. So in real time, it looked as if I was trying to be one step ahead of the market, and I took it off for, again, my last third for a 40-cent gain, just in case we snapped and flushed lower. So staying safe, staying conservative, locking in the money when it's there, and not overstaying, because just as easily this could have gone against us, and if you're stubborn and holding it, I mean, you would go from up $1 per share to down $1 per share. That's not what we want to do. We want to lock in the money when it's there and then look for our next trade, right? You can never dabble and hope and hold and guess. You take the trade and then you're immediately looking for the next trade. If the current trade you're in is working out, but then you see that it starts to go against you, just take it off, cut out the BS, okay? Just take off the trade and wait for a better entry. That's the way to do it. So that was March 24th, one trade over there. Next was March 25th. We took CAR. We bought this at 1570s average. Yep, right over here on CAR. CAR from 19s down into 15s. Now on CAR, I started in the low 16s and added in the low 15s and had a 1570s average. And on CAR, same exact thing as the PENN Trade. I was staying safe. I was staying conservative. Now on CAR, when it came down off the highs, 5 points, I thought it was very likely that it would have at least a 1.5 point bounce, a retracement before moving higher or lower, right? That's the high odds play. Now on CAR, my stop was if it went and held below 15 for more than 5 to 10 minutes. Of course, that didn't happen. It held against 15. So I got long with a 1570s average, and okay, I took a little bit of heat, no problem. Came back up. I was looking to make back 2 times my risk. I wanted to sell in the high 16s, maybe even low 17s if that came. But instead what happened was we came up, came down, went sideways for a little bit. And then if you see, we formed a small base against 1550, right? 1550, 1550, 1550. I was thinking if we snap 1550, if this thing can't even bounce more than 1.5 points off the lows after falling 5 points, if we snap 1550s, it may just go for 15, and if it snaps 15, it's going to wash out everyone and take out their stops, and then I can re-enter lower against low 13s, and that's a better entry than 1570, right? So again, same thing as PENN. I was staying safe. I was staying conservative. I took it off at the 1540s for a 30-cent loss. Again, that's nothing. It's pretty much scratched because I was looking to make back $1 on the trade, at least 1 point on the trade if it worked out in my favor. So a 30-cent loss is really, I mean, I can take this trade 100 times in a row, even if I win only 50% of them. If I'm losing 30 cents but making back $1.40, it's a no-brainer trade. So on CAR, took that off for a 30-cent loss. Again, look, nobody has a crystal ball. All you can do is manage your trade in real time. And a lot of the people in the room, I told the room that if you want to be a little bit more aggressive, your stop can be below 15. That's a higher probability trade because you're then giving yourself some wiggle room, right? Some leeway, right? And this might just be a quick chop out. But me personally, in this market environment, the way I'm staying consistent, the way I'm staying safe, and the way I'm making money with low stress is I am managing my trades in real time. And when it's not working in my favor, I cut it off. I don't try and overstay and hope and hold. I just take it off. Yes, now, it was funny because it seemed as if I was the only person in the room who took a loss on CAR. I mean, everyone pretty much made 1 point, 1.5 points, and that was pretty phenomenal to see that others were being a little bit more aggressive, whereas I was staying safe. And the beautiful part is that, yes, you can follow me, you can take my trades, but when you make your own plan and adjust it to our trading style, for example, a lot of traders in the room now are trading our style, but they're adjusting the stops to their own risk tolerance. So where I might be a little bit more tight with my risk, other traders are okay with risking a little bit more in the case that it works in their favor, which most of the time, most of our trades are going to work in our favor due to the fact that we're entering at such advantageous prices. I mean, relative to where the market was just 10 minutes ago in the 19s, we're now entering in the mid and low 15s. I mean, that's a pretty phenomenal entry relative to where it was, just about 10 minutes ago. And that's a pretty high probability, low risk, low stress trade. So that was CAR on March 25th. A 30-cent loss for me, but again, that's not a problem because of the fact that I am staying conservative and safe, and this is how I'm able to win. Next, on March 25th was JP Morgan Chase, JPM. Yep, right here. On JP Morgan Chase, we got short at 89.70s when it came off the lows from 86 into 89s. And what happened was, yeah, we're up about 50 cents a share, but we were looking for at least 2 points. And on JP Morgan Chase, what happened was, again, we broke above 90, and I wasn't concerned at all. I wasn't concerned due to the fact that it was up too much and it was due for a pullback. I mean, 90% plus of the time, these things will come back in. So I was looking ideally for it to hold against 90 and come back down to 88s, maybe even 87s. And I remember this one pretty vividly. For March 25th, our market read was pretty spot on. Our idea was that we wanted to see a squeeze out the open and take out the shorts and capture longs at the highs and then bring them back down. That was a pretty nice read. The entire market pretty much followed our plan to a T, but our execution was a little bit too early and I was staying tight just in case. So on JP Morgan Chase, shorted at 89.70, and then once it broke above 90, I was staying safe due to the fact that I didn't want to see it come back below and then run up into 91, 92s. So I wanted to see this hold against 90 and just pull right back down. When I saw bidders bidding above 90, at that point, I told the room, guys, I'm taking this off for break even. If you want to hold it, stop is above 90.5, but I'm taking this off for break even. So JP Morgan Chase, it came back down below and I took this off break even. Again, obviously in hindsight, everything is so obvious. Yes, I should have held it. It fell down 4 points. It was a perfect entry. But again, in this market environment, I am staying safe and this is how I'm able to take on low risk and high reward trades. So for March 25th, that was our only pretty much flat day of the week on CAR and JPM, 2 trades. The room did pretty well, but me personally, I'm staying tight risk, and that's how I'm able to manage my risk while staying safe. Next was Beyond for March 26th. Yep, on Beyond, we got short at 72.50, pretty much nailed the high. Nice push off the open, 68s into 72s. Popped on the scanner, got short right at 72.50, and boom, 2 minutes later, made 2 points and covered in the mid 70s. That was pretty cool. Again, see, like the difference is on the Beyond trade, it worked out immediately. There was no chopping action, there was no bullshit. It just worked out immediately. On the quick pop, here's the reversal. Whereas on JP Morgan Chase, it had the pop, it pulled back a little bit, and then it held. So I took it off for break even, right? Now, on Beyond, totally different action. This is what we look for every single day. This is what happens 80% of the time. Boom, quick, unsustainable move, right into a key level, and there's our reaction, our pullback. That's the easy money. So on trades like CAR and JP Morgan Chase, they're rare, but when they go sideways, I just take them off for break even. That's the way to stay safe. Next for the 26th was CLX. We bought CLX. This is actually Geronimo in the chat. Geronimo bought CLX at, I believe it was 167.40. Yep, he bought CLX 167.40. On this, pretty much got the low over here. Geronimo in the chat, our moderator, when he saw CLX fall from 172s into 167s with no real bounce in between, he called this long in the room at 167.40 and he sold for 2 points, 169s, and he held the piece for 170s. So that was a pretty nice low risk, low stress, high probability trade over there, and his stop was below 166.8. Didn't come because it's a key level again that we call in the room for all the members. And again, that was CLX, our midday trade. So how it works is I trade the first hour, and then after the first hour, we have our moderators who are pretty much in there every single day, helping out, trading, etc., calling all of the setups, everything they see. So whereas, yes, I'm the first hour and then I'm done, for whoever wants to trade longer than that, we have Geronimo, a very phenomenal trader in the chat, calling all of his trades, along with our other moderators who are also very skilled and top level as well. Next, we're going to March 27th, Friday. On Friday, Geronimo as well. This is a thinner stock, but it was a no-brainer. Geronimo got long works at 2.4. He called it in the room live. He bought at 2.4 and 2.37 when it came off the highs, just over a point with no real bounces in between. He bought a 2.4 and 2.37 and took it for about 30 cents and sold it in the 2.7s right over here. And again, that was called live in the room when it was in the 280s. We told the room in the 280s that we're going to bid at 2.4 on works. So everybody had time to put in their orders and have a bid in at 2.4. So when that came, I mean, that was pretty much our low. Boom, straight bounce, pretty much an easy 30-cent gain with little to no heat. Next was on WWE, Adriano as well. On WWE, they said that they're going to pull out fighters due to the coronavirus. That was at 10:05 a.m. right over here. Adriano got short at 34.26. He called this in the room and he covered this for 1 point a few minutes later in the 33.30s. I mean, that was a no-brainer trade. A news piece came out, a negative news piece, and WWE was still trading in the middle of the range. So when that news piece came out, it was high probability that it would at least snap the lows and give us a fast washout to cover into. And that's exactly pretty much what happened. And again, all of these trades are called live in the room in real time. And last but not least, our chef trade, our swing from the 470s, has been doing pretty well, right? So chef, if you recall, now on chef, I bought this for a swing long at 470s. I called this in the room live as well, and pretty much sold in the 7s, 8s, and 9s, half my position, and I'm still holding half. Yes, I was up quite nice when it was in the 13s, but I'm holding this for at least 1 year. I think this will go back up into 20s and 30s if this virus fades. I've already locked in enough profits that if it comes back down, I can just rebuy and buy more. No problem. But yes, again, chef, that was a pretty phenomenal trade. A lot of members caught this with me. Let me actually post a few screenshots right over here. And there's quite a few more, but honestly, if I show all of the testimonials, this video will be half an hour long, and I want to get right into the juice, which is what Adriano wrote in the room on Friday after the close, which I think hit really close to home for a lot of members. It was super motivational, and I think if you can just take something away from this message that he gave to everybody in the room, which I'm going to show right here in a second, I mean, look, these are the guys you have to be around with that will push you to the next level. So let me actually quickly bring up what he wrote real fast. All right, so here is our room, and let me quickly scroll up real fast to Adriano's post from Friday after the close. Dun, 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 dun. And then I'll slowly scroll down so you can all read what he wrote. So originally, he started out answering a member's question, and then from there he got deeper and deeper, and then he pretty much spilled his story. So here we go.